Yeah, that's a great question. Losing positions are always the toughest because once you own a stock, you look at it differently. You become married to it. You're like, oh, and you know your break even, and if you believe in one of the stocks that you're down on your luck with right now, you think over the long term it's a good story, then maybe you want to cost average down a little bit. I'm of the ilk that you know going into it, if it goes down 10%, from a technical point of view, I'm out. I want to revisit the trade. I take lots of notes. I advise anyone that wants to be an active trader or just an intermediate trader to make sure you're writing down your process. Write down, why did I buy this stock? What was my thinking? As a superstitious trader down here, what did I eat for lunch that day so I can eat it the next day because I had a good day trading? The retail investors, I learned more from them than I could ever. I won't tell this to my kids. I'm not going to say, hey, you guys are teaching me lessons when you're making crazy moves in the market or getting involved in the coin of the day. But I like the fact that the younger investors are more cognizant of what's going on, have that access, have the ability to just learn by doing. But the risk management, like you said, is number one. And what would I tell them? One, diversify. Don't put all your eggs in one basket because this is the next stock that's going to the moon. There's a lot of FOMO in this market, the fear of missing out, the next big thing. Guess what? I've done it myself. We're all guilty of it. I bought Google on its IPO day. I made 50%, I sold it. Yeah, I still think about that one every day, but that was my goal. I didn't know it would actually go to the moon. So you just have that strategy. If you reach your goal, cash out a little bit. It's okay. No one ever went poor by taking profits. You are going to miss the big one from here, here and then, but just make sure you have that game plan. That's the most important thing to me because I don't like the new investors that just come in because it's a revolution or it's a cult or it's a cause. If it works, great, but as long as you have that risk management and don't blow yourself up, then you'll be fine. Investing is not easy, but if you're in it for the long term, you're in it for the right reasons, you're diversified, you're going to do okay.
Yeah, and over the long term, stocks tend to go up, with some periods in between there. Of course, we have bear markets. Callie, just your thoughts on what Jay's talking about. We talked about risk management before, but in terms of you, the millennial of the group here, and your approach to the markets, having come up in a time of very low interest rates, things are changing right now. How do you talk to some of your clients about what to expect in this kind of environment?
Yeah, definitely. Well, first of all, I want to echo, everything that Jay said there about, writing down your process, determining your game plan. That is sage advice, no matter what age or stage of your life you're in. But thinking about the millennial and Gen Z investors and the world that we grew up in, I mean, we've had our own financial struggles ourselves. Again, we lived through the great financial crisis. We lived through the dot-com bubble. I mean, we were on the other end of the boom post-GFC. Many of us were. So we're already one step behind everybody else. And that's not to complain. It's just, speaking about where we are. We're buying into many markets that are already expensive. So we're, naturally accustomed to looking for a little bit more growth. We're in a better spot to invest in growthier stuff because we have that risk appetite. But that makes it even more important to have that plan. And that's, what we emphasize again and again to our customers. And, personally, it's something that I want to show through my research. I can look at, the trend lines all I want. I can look at markets, sectors, trades all I want. But ultimately, when you talk about on a customer-to-customer basis, they know the best thing for their portfolio. And I want to keep them informed, but at the same time, I want to guide them to the point where they can understand exactly why they're investing and what they need to do in times of trouble. I want them to be the best informed they can be, but at the same time, I want them to be, armed with enough knowledge on their own end to understand exactly what moves they need to make in crazy markets. But one other thing I'll throw out about young investors, I mean, we're sitting here, watching inflation. We're in a high inflation, low yield environment. That's pushing us more and more toward growth. I feel it in my own investing strategies, and I know my friends and younger family feel it. So I think that that's going to be a burgeoning trend. It already is a trend, has been a trend over the past decade or so, the low yield environment, but that's becoming even more and more desperate these days. So I'm interested to see how that plays out over the next decade or so.